Hey guys, we're getting into brokers today and also our opening volatility, which is going to include stock screeners to find out those gaining stocks and what we want to be trading for the day. So cool stuff. We're going to get into that today and a couple more specifics, but mostly brokers, the introduction of those and the factors with those is going to be important for when you pick out your broker. It looks like next week, I think on Tuesday, what we're going to do is finish up with brokers and the parts of a broker, how you want to pick one, and then get into just a brief, quick outline of option trading. And we'll probably play it off of that by what we do for Wednesday. So enjoy, guys. All right. So I gotta say, guys, we're doing pretty well. We are basically done with technical analysis. The only thing we really have to talk about is opening volatility, but I mean, we've been talking about that for basically pretty much every day with technical analysis, opening volatility, high flyers, breakouts. That's big stuff, and those are the movers, and we kind of got that down, so that should be pretty quick.
Nathaniel Wynn to the office, please. Nathaniel Wynn to the office.
We could look at screeners for a second too, which I guess would probably be good. We'll look at that. The plan after that, we got probably screeners, breakouts today, and then we might start to get into brokers and the different options with brokers that they're going to offer. Basically, last 2 days is just going to be this, and then next week all we really have to get through is brokers and actually applying everything and actually doing it. So we're getting there, guys. Go us. So I guess since I thought of it, we'll start with screeners. So on Yahoo Finance with your broker, and your broker, I guess we haven't really specifically said this, but it's just the person you make an account with, and you'll buy stocks through them, you'll buy options through them for foreign currencies. All your assets, you're going to go through your broker, buy it with your broker, and it's in your account with your broker. So we're going to look at screeners today. We're going to look at equity screeners because that's where these are the most applicable. Mutual funds, ETF futures, and index screeners, it's all the same basic stuff. You're looking at the same basic things. But screeners are what you want really to identify what are the stocks going to be that everyone's going to be looking at, the important ones for getting it going. What are the stocks that people are trading and you can make some money on? So let's start looking. I actually haven't used Yahoo Finance screeners. I've used Fidelity screeners a lot. So let's see. We're going to look at all industry caps, and the biggest thing is going to be our opening volatility. So most of the stocks we're going to trade actively. So screeners, guys, are for active trading. These are basically, you're going to go and you're going to say, I want a company that's doing this and this and this intraday, doing it proactively. So we're going to look at all stocks because we're not here to judge based off size, but we are going to judge based off price. So for day trading, guys, and for swing trading, especially starting out, our biggest movers are going to be under that $20 price target. When we start to get bigger, when we start to grow our account, we can see bigger moves. We can start to trade bigger stocks, but bigger stocks usually are going to be tougher to see as volatile big movements in. Usually under $20, I have my own personal range, maybe about 2 to 20. And then there's OTCs, which is over-the-counter stocks, and those are like the dirt cheap kind of stocks, which is a totally different thing. So sector with a screener, when we're looking at, like gainers, we don't really care what the company does, especially with screeners. It doesn't matter. We don't care at all about the company. All we care about is what the stock is doing. So market cap doesn't matter. Region, really, U.S., I just trade in the U.S. Markets. But we don't care about sector. We don't care about industry. We are going to add another filter, though. And what we're going to look at is daily gain. So let's see. How do we find this in here? Let's see. Share statistics. Yeah, that's it. we'll do gain. Oops. No? Percent change probably would be it then. Percent change. All right, cool. So we're going to look at percent change, and the other thing we're going to look at is volume. Remember, we talked about that. So intraday volume and then average. Is there average volume on here? Keep in mind, if we're doing this pre-market, so we're looking at the stocks that moved before the day started. We're looking at the stocks that are going to break out during the day. We're looking at the stuff that's coming up, and we're getting to trade it at the beginning of the day. We aren't going to have intraday volume. We're going to be looking at average volumes for the past and pre-market volumes. I guess Yahoo Finance doesn't do average volumes, but also pre-market volumes are going to be big. So we set up our screen. Our percent change, usually about 10% is a good number, and you're just going to be looking for the ones that have the biggest percent change. And volume, did not add volume. We'll just do intraday volume for this example, but usually you're going to want to look at average volume. But you want our volume to be 250,000 at the lowest, right? We're trying to keep it liquid. We're trying to keep our stuff going. And then that's basically the basics of just setting up your screener to find your gainers. So find stocks, and there we go. Now what we're going to do is we're going to sort by percent change. So this is intraday percent change. When you're starting out, most of our trading is going to happen early in the morning. So this will be pre-market percent change or very early in the market percent change. So usually we're going to just look at the top. Biggest movers are our best friends, right? We see the volume too, which is very important. So huge company, 191% change today. That's giant, guys. We see the volume 12 million. That's huge. That's great for trading. Next company, 72%. That's great. 44 million in volume. That's terrific. These are, 42% move today. All we did to find these stocks was go to our screeners, look at our biggest movers under $20, and voila, we have a great list, and all these stocks can be great trades. You just pull them up on your charts. You'll use the software that your broker has usually for active trading. You just pull it up, look at the intraday chart. I mean, I'm using Yahoo Finance here, obviously. But notice how we don't care at all about the key statistics. And we also really aren't looking that much at the long term. Most of these companies are going to look just like this. It's a total downtrend because these are going to be cheap stocks, but they're moving because of either a catalyst pre-market. I'm sure if I looked, there'd be probably news on this or something. They did something terrific, obviously. Of course they did. We're only in it for the short term. We're only in it for the gains. So we can look maybe at a yearly chart on some of these to draw our support resistance lines. We can see there was a max here, that's a resistance. There was a line here where it had a double top here. So resistance here, we can draw a long-term resistance line right about here, just above the $3 level, and right again about the 3.6. But basically what we're doing, and we can see this, we saw, if I can get I guess that's fine. End of the day yesterday, it closed, here we'll go back. It closed yesterday at, and your broker will tell us a lot better. It closed at $1.34 and it opened at $1.34. So everything happened during the market. That's usually pretty rare. A lot of the times these high flyer stocks, what you'll see is there was a previous close and then pre-market activity. If we look at these two other ones we looked at, we see a previous close of $1.30, opened at $2. That's huge. So now it went up to a day high of days range 244. So that's a big gain there. And here again we saw previous close and then it opened, so closed at 11.6, opened at 13.6. You got a big gain pre-market, and those are usually going to be our biggest catalyst for movers because that's where everyone's looking at it. Now, important thing to look at, guys, this stock opened at $1.30 today, moved all the way up to $4.13. That's a huge move, obviously. And this doesn't have a terrific pattern, but you jump in off of the pre-market activity, you jump in off of the early gain, and you can ride it to the height. Same thing here, right? We see a daily chart here, and we got this from our screener. We just pull it up, and these are where you're going to start to see those patterns we've been looking at for the past Technical Analysis Tuesdays, and we'll see them come up here, and that's where you're going to be trading your patterns on these volatile movers. Here we go. This is a daily chart. We saw a big pre-market gain, dumped down, and then it came here. And look, guys, I mean, these are support resistance levels. It broke past the support. This is obviously later into the day. This was a tougher trade to make. not a whole lot of opening stuff. Looks like a pretty big crash off the open. So you can't always just buy straight off of pre-market gain open and just expect it to go straight up. But if we got our VWAP, we got our indicators, I mean, I'm sure we could see some nice movements in this just by looking at what we've learned so far. Yeah, boom, break through the VWAP and we have a big rally up. So you buy the VWAP breakthrough, you'll be good. This is where we're going to start to apply everything we've learned. Same thing here. We saw it big spike up, goes up in the day, goes past the VWAP, and looks like almost a little bit of a false ABCD, but then it kept going and it broke past here towards the end of the day. So the biggest movement that we're going to try to catch is we're going to go to the 1 minute candle and we're going to look at like 9:30 to noon. Those are going to be our biggest trading hours, and that's when we're going to see most of our gains, guys. So, you know, we open here and we see this pattern. It's not a full head and shoulders, you know, it moves and it's different for every stock. These are just random stocks. I don't know what these companies are. I don't care what these companies are. You're just trading them off the charts, and you're only trading them based off how they look intraday. We saw a big run up here. I mean, just go through your screener. Not all of them, like, you know, some of those were tough charts. Like, this is a tough one to read. That's not the easiest thing to see. But once you have, you know, probably a solid 20 stocks, like, it depends on the day, right? And it depends on how active the market is, the market conditions. But once you have a huge list like this, you just open them all up on your trading platform, whatever your broker gives you, and you just look at the charts, and if you see something you like, you stick with it. If you see something you don't like, go to the next one. Go to the next one. Systematic. You're just going through them, trying to find the ones that work for you. That was intraday, and Yahoo Finance, your broker, they're going to give you good screeners. Another great thing you can look at is like, just Google like pre-market gainers, and I think like stock market watch will come up, yeah. And this at like the 9 o'clock, just starting to do your pre-market research. This is a great website. They'll give you your top gainers, they'll give you their price, so if you want to see if it's under the 20, maybe over 2 to 20, that's usually a pretty good range for day trading. You look at the symbol, you can type it in, put it in, look at the chart, you can look at the previous support resistance levels, percent change, looking at the ones here, biggest ones. Also your losers like we talked about, those aren't really going to be our big trading for the big days. Those are going to get, you know, just sell-offs. Sometimes you might want to short them, but a lot of these stocks, like K lost 50%, we pulled it up on here, and usually our gainers are going to be pretty flat charts. Or our losers are going to be pretty flat charts. This one especially had very little volume. But if we look at the 5-day chart, or even just the 1-day chart, this was obviously very, 100 volume, so that's probably a bad example. But Red Robin Gourmet, Red Robin. We see the losers, and we don't usually see, we had a dawn drop, and we didn't see any patterns. We didn't see any trades to really make on the losers. The gainers are going to be where the attention at, and that's where you're going to be trading quickly. So those are screeners. They're great for identifying your stocks to trade for the day. Not as much for long-term. You can make long-term screeners, and you can use long-term screeners like to look at market cap, PEs, and stuff. But honestly, I wouldn't really recommend it. I think the best way to discover long-term picks and long-term positions is to just do your own research and look at what you use. Look at, like, if you have an iPhone, or if you just bought something at the store. You go to like Walmart a lot, or things that you use in your house, products you see people using. If everyone's wearing Nike shoes or something, it's really better to find long-term picks and things that you actually believe in and actually use, because if you buy stock in a company you actually believe in and think about is important and useful, and it's not going to go to zero one day, that you just found off of some screener that's completely emotionless, then you're going to stick with it in a crash. You're going to keep going with it when it goes down, because you're with it and you're saying, okay, I'm okay with a short-term loss as long as in the long term I have good prospect for this company. And it's not like every company you have to use their product. If you think that what they're doing is great, that's awesome, as long as you're long-term confident. And that's something that stock screeners don't really do a great job of. They aren't going to be long-term telling you what to do. Okay, so that was our gainers. And opening volatility, it's just the big movers pre-market are usually going to be big movers. intraday, and you can make some solid gains. You might not make like the entire movement of the stock, but if you can just scalp a little off, like, I mean, that was a 200% moving stock in a day. And day one was just about how important 7% was. So if you can capture just like a percentage of these gainers and just take conservative gains, take your gains, take them as they come. I mean, I try to play off the charts, right, and set my sell targets and buy targets off of charts. I don't think about specifically where I'm gonna get in and specifically where I get out. Play everything off percentages as we talked about yesterday, and you should be good as long as you just make consecutive smart trades. Set your stop losses. Like trailing stops are good too. Trailing stops, just a continuation off stop losses. Like if the price of the stock moves, your stop loss will go up if the price goes up. So if you set like a $2 stop loss at a $5 stock or something, and then the stock goes to $7, your stop loss will move from $3 to $5. That's trailing stop loss. Set that up with your broker, and you can just go through your broker. A thing about putting orders through with your broker, a lot of brokers have an online platform, and then they'll have, like, you download it and they have the full trading program, the full trading platform. Highly recommend only trading with the trading program, trading platform, especially for short term. Like if you're just going in every week or so and putting money into a retirement account and just putting into an ETF or a fund or something, it can be okay to use like the broker's website and to just put an order through on their website. Something to watch out for that though is if you do it after market, you're gonna have to do like a market order, so you'll buy the level that it opens at during the next market day. So you can always, especially with mutual funds where it gets priced off the end of the day, you can see some volatility intraday. So always be careful with that. Stick with limit orders usually. But even then, you know, if the price of a stock's $10, but it's like a Saturday, you don't know where that stock's gonna open on Monday. There might be like, it could do some movement intraday, and your limit orders or whatever orders you put in could be bad. You could be out of the money the instant you get in off of something like that in a market buy-in. So always be careful putting trades in through the website for a broker. Usually though, it's not going to give you the full look at a stock. You're not going to see your deep down charts, because the software that a broker gives you is your gateway to looking at like level 2, long-term indicators. Yahoo Finance is great for finding good stocks, but especially for active trading, you're going to only want to use your broker's software. So find, you know, we're going to talk just a minute about the characteristics of a broker, but software is huge. So for short term, use the broker software, use their charts. Everything's going to have live feed, live data, which is exactly what you need to make your smart decisions and what you need. Because with these cheap stocks, right, with the beginning of the market gainers, with these stocks that are moving quickly, you're looking at 1 minute charts, and you really are making positions in the first 10 minutes of the market that you might exit 15 minutes later. You're making positions that, you know, if we look at the daily gainers, or go back to that, I guess that screener didn't get saved. But with these cheap stocks and with these big gainers pre-market, you're getting in and you're looking at setups in the charts on the 1 minute, like the 1 to 5 minute candlesticks. And those are the candlesticks you trade, those are the charts you trade, and everything's in the short term. You're looking at it in the short term, and you're looking at all your charts in the short term. So live data feed is huge, and you always need to have like a broker that gives you good data, because that's everything you trade off of. Your candlesticks are just data. Makes sense? Yeah? Cool. Alright, let's talk about the attributes of a broker and what to look at when you pick one. So there's like tons of brokers out there, and this is really going to be our gateway into applying everything you learn. So really getting started is to just pick out a broker. So first thing to look at is trading fees. This is what you hear on those commercials, you know, $4.99 trades with Fidelity or TD Ameritrade or something. Basically, every time you make a trade with a broker, they're going to charge you a commission to buy in and a commission to sell out. So, you know, some of them, like, you know, they have their fees, and they're like, you know, X many dollars per trade, or some of them are by per share. So per trade, you pay a fixed price every single trade to get in, and a fixed price every single trade to get out. So basically, you're going to look for lower fixed prices, and the lower the better, right? So it's one of the things to think about. One of the aspects is who's going to give me the cheapest trade fees, right? Another way that brokers do it that can be a lot better for active trading is doing per share fees. So you might pay like X fractions of a penny per share with a minimum of like $1 per trade. These are usually going to be your quicker day trading active brokers where you're going to get a lot cheaper fees, and you can use them for long-term investing too. They usually just won't have these mutual funds or mutual funds. You can still buy ETFs because they're considered equities in an equities market. So when you look at things like that, and they'll probably do like some brokers, they do per share or all in, just pay a set number for your trade. And those per share trades can be really good because you'll pay X price per share of whatever stock, like any stock you buy in with a minimum. And a lot of the time, you're going to see lower fees in per share trading plans when you start off, especially because you're having smaller position sizes. And even as you start to grow up, get bigger trades in, you can see a lot of the times, just do the math in your head. What is the price per share that they're charging, times the number of shares you're buying, in a month. If you buy and sell a stock, look at how many stocks you buy and sell in a month. I mean, personally, like, I can get in and out of like 20 positions in a day. So like paying $5 a trade for 20 ins and 20 outs, that's very expensive, versus paying per share can be a lot better, especially for active traders. But if you're looking at putting in retirement and you put in like 10 grand like every month or every year, you put in 10 grand or every half year, something like that. We talked about day one, how much you put in. If you put in like your monthly amount and you're putting it into like a diversified fund, or maybe you put it into different things every month and you're not specifically spreading it out across like a bunch of stocks, then it can make more sense to go with a broker that offers per trade fees. So you'll pay a certain fee for the whole trade. And if you're buying a lot, then sometimes it makes more sense. Just do the math, look at how many shares you buy. A lot of the times the per share plans are going to have limits, like caps on them, so they won't go above like a certain amount. Sometimes it's $1 amount, sometimes it's like 0.2% of the actual entire position it can't go above. So look at that. Trading fees are like the thing people look at the most, and they're like the most advertised part of brokers. We have cheap fees, we're great. It's usually, it's good. But it's just one thing to look at, other factors too. So the second thing we just briefly touched on was mutual funds. So access to mutual funds is going to be huge for long-term investing. If you want to get passive hands-off, ETFs and mutual funds are great because they're diversified baskets of stocks, as we've talked about. So with those, a lot of the times you might have to pay higher fees per trade, and then you might also have to pay mutual fund fees or ETF fees. So look at the broker, and also look at the funds that they specifically offer only to themselves, and say, how much does broker A charge to get into this mutual fund, and how much do they charge? Do they charge a yearly fee for this mutual fund versus broker B? And sometimes you can say, broker, whatever, they let you buy their ETF funds fee-free. Like, that's huge. You can get free trades. That's great. Into diversified portfolios that you can keep for for long term. You're just worried about getting into it, right? You're not selling out. So that's a one-way trade in to specific assets. So that's also something to think about, is you're just going to have one trade in. So your fees would just be to get in, not to get in and get out. For swing trading, back to the trading fee thing, you aren't really as concerned about mutual funds. So something you could do is maybe open an account with like a big broker like TD or Fidelity, the likes, and maybe buy your index funds or market-specific mutual funds. I don't really like mutual funds. I, personally prefer picking out your own stocks and stuff, so I tend to go towards setting up your own portfolios, especially through finance is great at that, or through your broker specifically. You can just put your trades in, and buy the different stocks. But if you're looking especially at ETFs, which are great, ETFs are always good, and they're great for long-term growth because you're matching the market, you're doing the market, and that's A-okay, that's terrific. You might have an account with one broker to do that, and you might have an account with another broker to do your swing trades, so you can, buy something and sell it 3 days later or something like that, or maybe in a week or something, not as long-term whatsoever. And then you could also use that same broker for if you wanted any day trading or stuff like that. Another thing you might notice is higher fees could correlate to better quality funds. So especially with some of these ETFs, you're going to have to usually pay whoever the provider is some kind of fee or some yearly charge if you hold it long term or something. Like Vanguard, they do their funds and their ETFs, and you'll usually pay like an ETF yearly charge or something like that along the sorts of. There's extra fees besides just trading into it. So it's really good to look at the fees in different brokers and different brokers' products and what they offer, and say, who's got the cheapest fees but still the best performance. So, if one person has a lot better performance but they also have higher fees, that can be okay because they're performing better. So, trading fees, and then the selection of funds, ETFs, and what a broker does for you, who they have working for you to trade for you, so you can have your hands off, and they get the stuff going, and they get the market performance for you. So, third thing, really big, like huge for active trading, is going to be the software they give you. Guys, I can tell you right now, some software out there is very bad. Like, it's difficult to use, hard to read. I mean, you can go through softwares, like trading softwares, and some of them you just know, like, I can't use this. For some people, they can use all of them. They're like, I can adapt to this. I can get past like 1980s text with like font size 24, and I can look at these like hideous charts, and some of them are really bad. And I can get my trades done. I mean, Yahoo Finance, I think they have good looking charts, and I think if you're going to be sitting down in the morning and spending 9 to 12, like if you're spending like 3 hours of a day looking at a chart or at a bunch of charts, I mean, it's usually better to actually like what you're seeing and being able to fluidly move through it so you have things moving quickly, because along with ugly looking software, you have decreased productivity because you're not moving as fast through your screeners. If you have a software, you pick a software that works for you, that looks good, that flows well, that is quick, you're going to be getting your trading done faster. You got your screeners up, you got your charts up, you click it, it pops up instantly, your level 2 comes up instantly, everything's going perfect. Then you're going to be more productive, you're going to have a quicker trading experience, and it's going to be going better. I mean, there's a huge difference between like, let me pull up a side-by-side. Thinkorswim, like TWS, these are some really good charting software that are great, and we can see, we put them next to each other. These look pretty good. Like, I don't know how well you can see them, but we can see everything we need to know, and it's all there. And that's the point of these softwares, is everything you need is there, everything you think you can need is there, you have it all there. And that's the point of it, is everything's in front of you, so you don't need to go off and spend time working on other stuff. You just get everything going. So when your broker gives you this for free, like these are expensive softwares, right? That's a huge plus, and you might say, I'm willing to pay more for fees, or for annual fees for long-term equities, if I can use these better charting softwares to check out what should my long-term positions be. Look at more in-depth market analytics, look at deeper indicators, better information, and especially level 2 is going to be huge. You always want to make sure you're getting level 2 for active trading, because the bid-ask spread is going to be huge for entering and exiting positions. Thinkorswim does a great job of that, terrific level too. But each charting software, a lot of the times they're dependent on the broker. The broker has their own software. Sometimes the broker uses a hosted software and they give it to you for free and they pay, they'll pay for it for you. Sometimes you have to get a certain amount of trades in per month to get free software. Sometimes there's software fees. So maybe look at it and say, is it worth paying, a software fee every month if I can get a lot cheaper trades with this broker? And sometimes the answer is yes, and that's great. So 3 things to look at, and they're all very important. Fees, funds, and charting software. Fees, funds, and software. Look at that. It almost starts with F for all of them. We'll be done in a minute. Yeah, those are the 3 things to look at with brokers. I'll see what we get to next week. Next week we might just meet for like one day, because this is pretty much all the stuff you guys need to know. Just like look up brokers and start researching them. Like everything's out there, and they all will tell you what they'll do and how their fees are structured, their funds that you'll have access to, and who they're partnered with. So if they're partnered with like ETF funds, then they'll tell you that. Yeah, those are brokers. Opening volatility, huge. You're always going to be looking at those screeners and trading the big gainers for the day. That's the plan. That's the strat. Works great for short term. Long term, using your charting software to look at the specifics of all the stocks and compare them to one another is also cool. So we'll see how it goes, guys. See you.